This sort of 70s problem, which I think we now face, is all ahead of us. But this time, after all this long period of fiat currency suppressing interest rates, etc., etc., I don't know how long it will be before the whole system falls apart, but probably not terribly long. Year or two, maybe 3 if you're lucky. That's assuming, of course, that the conflict in Europe and the Middle East doesn't flare up and hurry things along.
Over the past few years, there has been an awakening toward precious metals and precious metals-related investments, particularly in the East, where investors are following the path of central banks and massively loading up on precious metals like gold and silver. According to popular bullion dealers and respected gold bugs worldwide, this awakening is the first phase of the ongoing collapse of the global debt-based financial system. These experts believe the first sign of this collapse was central banks showing increasingly voracious appetites for precious metals like gold and silver. While central banks are still accumulating both metals at unprecedented rates, retail investors in China and other parts of Asia are also investing massively in these metals, leaving only Western retail investors, the majority of whom are unfortunately still solely dependent on the fiat system. In a recent discussion with Anthony Fatsees, Alasdair MacLeod, the head of research at Gold Money, outlined some important signs of the impending collapse, adding that the current fiat system might be completely gone, with trillions of dollars wiped out in less than 3 years. According to Alasdair, the world is in the process of a ground-shaking transition from the debt-based fiat system to a gold-backed standard that has served the world for thousands of years. During the discussion, Alasdair predicts that the fiat system will give way to a new gold standard, a gold standard 2.0 if you would, and the process will begin in Russia and China. Not only have both countries been amassing a large amount of gold and silver, but they've also been quite vocal about their desire to depart from the Western-backed financial system. Alasdair believes the final moment of departure is almost upon us and could happen as early as 1 or 2 years. Both countries will finally reveal their true gold reserves and revalue the metal to create a better financial system. We will present clips from Alasdair MacLeod's interview. But before we do, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. We appreciate the support and hope you enjoy the video.
There are 2 stages in this. I mean, we're seeing the first stage at the moment. And I think the best example of it is the People's Bank of China. Everybody thinks that the People's Bank of China has been buying gold. They got it the wrong way around. Actually, what they're doing is they're selling dollars. So they're trying to get out of dollars. Now, there is a political element in that, sure. But the Chinese can see exactly what's happening. I mean, the debt trap, which I've just described, the Chinese understand this. They're not idiots. The Russians understand it, and they're just watching the whole thing about to topple over. And, nobody wants to get blamed for the whole thing falling over. But the foreigners in particular understand that you've got to sell dollars. So what do you buy? Do you buy euros, sterling? Not really. I mean, you might get out dollars into some of that stuff, but it's in exactly the same trap as the dollar, just maybe not quite so bad in some cases. Where do you go? You go into gold. Why gold? Gold is legal money without counterparty risk. All the rest is credit with counterparty risk, particularly fiat currencies. I mean, what you have with the dollar is it depends entirely on the faith you have in the US government. Foreigners' faith in the US government, is this something that is likely to persist? I think foreigners at the margin are beginning to doubt their faith in the dollar. And it always starts with the foreigners. They're the first to understand that they shouldn't be holding a fiat currency. The residents of a country who use the currency don't actually appreciate this in the initial stages. They will do a double take on this and they will think, well, prices are rising. This is terrible. They don't actually connect it with the falling purchasing power of their currency. But when they do, then the currency is toast. It's had it. It's finished. And that, I think, is the next stage. I mean, I don't know how long it'll take for people to begin to understand this. But I can tell you domestic residents in America and the UK do not understand this at all. They think a pound is a pound, a dollar is a dollar, and I can, go out and spend it, hang on to it, whatever. and its price is rising as far as they're concerned, not the purchasing power of their currency going down. At some stage, they will wake up to this. And then it's finished. It really is finished. The fiat currency world is finished. And I don't know how long it'll take. I mean, in the 70s, we got nearly to that point, really, I think, following the devaluation, which was what, 1968, something like that. And then we got to, in the 70s, we had the crisis where the IMF bailed us out in sort of around about the end of 1975, beginning of 76. Interest rates had to rise to 15% plus. I mean, well, that was a coupon on 3 of the gilt issues, admittedly medium dated ones. The government was forced, the Labour government at the time was forced to do something which it really didn't want to do. And that was raise taxes, cut spending, which it did. It had to bring the budget back into balance, and the thing was saved. We're a long way from this sort of activity. But until then, the currency was collapsing. I mean, I remember briefly, inflation was recorded at 24.5%. You know, I mean, think what that does. So this sort of 70s problem, which I think we now face, is all ahead of us. And but this time, after all this long period of fiat currency suppressing interest rates, etc., I don't know how long it will be before the whole system falls apart, but probably not terribly long. Year or two, maybe.
Alasdair MacLeod suggests that the West is on the verge of a significant economic and financial breakdown, while emerging powers like Russia and China are positioning themselves for a global shift. He argues that the Western banking system is showing signs of instability, and the next crisis could be severe enough to precipitate a transition to a new monetary order. MacLeod believes that Russia, China, and their allies are preparing to move away from the current fiat currency system and adopt a gold-backed monetary system. Unlike other analysts who suggest that these countries might only partially back their currencies with gold, MacLeod contends that a fully gold-backed system is necessary to resolve the looming sovereign debt crisis and restore public trust in governments. He speculates that once these Eastern nations implement a gold standard, Western countries, including the United States, may have no choice but to follow suit. This would be a radical shift in the global monetary system, compelling Western governments to abandon fiat currencies in favor of gold-backed ones to maintain economic stability and public confidence. Let's get back to the video.
If you look at history, fiat currencies only last a certain amount of time. Our fiat currency system, which I suppose has basically been, well, sort of post-war, because it was a fiddle under Bretton Woods. But when Bretton Woods fell apart, then, I mean, we're looking at what, 52 years, 53 years of fiat currency, pure fiat currency. I think it's almost time now, if you like, on sort of, if you look at the survivability of fiat currencies, we've done pretty well lasting this long. It's now, I think, about to fall over. I mean, as I say, I don't know whether it's tomorrow or in a year's time or 2 years' time or 3 years' time, we'll see. But we will go back to credit being secured to the value of gold. And in order to do that, you need to have as much convertibility as possible. What becomes, instead of being a fiat currency, it becomes a gold substitute into gold, and vice versa. And a properly constructed gold standard basically means that nobody bothers about gold anymore, but the values are secured to it, which is the important thing. And you don't need to hold gold. You can actually hold the currency and use it productively. So, but the one thing that is necessary for this really to work is to have an economy which isn't dominated by government spending, has relatively low taxation. So there is the incentive for entrepreneurs to rush out and invest capital in production. And actually, this is precisely the situation in Russia. The debt to GDP in Russia, government debt to GDP, is in the order of about 22%. And that's even after all this war spending. It's just remarkable. I mean, obviously, they've managed to achieve this because they sell an awful lot of oil and other commodity exports. But the other thing is that the level of taxation is a flat rate of tax of 13 to 15%. I mean, if you're really earning a lot, it's 15%. No more than that. Corporation tax, I think, is in the order of about 25%. So that's pretty normal, I suppose. So Russia doesn't have to do an awful lot to, in terms of evolving its economy in order to put it on a gold standard. It could do it tomorrow if it cared to do so. And it's very easy for a country which actually understands what it's doing to build its gold reserves and maintain them so that that cover is always there for the currency. And, in this article, which will be coming out, as you say, on Thursday, probably slightly before this comes out, actually explains the whole thing. I mean, it's very easy to do. But of course, the problem in the West is that governments don't like a strict, sound currency because it means they can't just sort of print it at will. They can't just finance their deficits at will. The politicians just want to spend. They don't want the constraints of the market. They don't want the constraints of gold. Basically, they will continue to spend us into bankruptcy. But Russia, and China for that matter, will need to protect themselves from our collapsing currency, because if our currencies collapse, any other fiat currency will go with it. I mean, because it's the whole of the fiat currency system which is really well past its use-by date. So Russia, I think, is going to have to consider doing this.
While gold has had a very impressive rally in 2024, starting the year at roughly $2,043 per ounce, and now up to $2,660, analysts at JP Morgan and UBS predict prices will continue to rally into next year due to a revival in large inflows into gold ETFs and expectations of further rate reduction from central banks, including the US Federal Reserve. Earlier this week, JP Morgan analysts said, "There have been strong physical demand from China, and central banks supported gold prices over the past 2 years, but investor flow and retail-focused ETF builds in particular continue to hold the key to a further sustained rally over the upcoming Fed cutting cycle." UBS analysts said they also believe gold has more room to run over the next 6 to 12 months, despite hitting multiple all-time highs in 2024. They added that key factors pushing the rally include a revival of large inflows to exchange-traded funds, something that has been missing since April 2022. Increased demand for gold and a continued rally means higher prices for other metals, particularly silver, which briefly notched $32.62 per ounce on Thursday, its highest price in over a decade. Experts believe silver is now ready to chase gold's record-breaking rally and could easily outperform the yellow metal when the second leg of the bull run begins. Please share your thoughts on Alasdair MacLeod's predictions for the US dollar, gold, and the global economy in the comments section below. Also, ensure you smash the like button, subscribe to the channel, and turn on the notifications bell for more videos. Thanks for watching, and see you in the next one.